Welcome to the program. Today we'll ask the question, are markets poised to go up or down? We'll take a look at inflation and we'll also check out what's going on in the healthcare sector and the NAB. I'm Peter Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Pete, first question, markets going up, markets sort of moving sideways at the moment, a lot to deal with, obviously Trump, the Fed, the election in the US, earnings season.
Yeah.
What's your position on where we're heading at the moment?
I think the markets are poised to go up, but they want to get all this big news out of the way. The US election, the OPEC decision on oil, ultimately will the Fed raise in December. Once they're out of the way, I think markets are poised to go up. I think earnings seasons in the US has been pretty good, and therefore there's just not enough good reason to sell off. But I defer to my great colleague Paul Rickard when it comes to, what do you reckon, Paul? Up or down?
I think I'm with you, Peter, that look, they really, despite some of the fairly benign news, aren't really heading south. Look, you could say they're not doing a lot, but there's a lot of worries over, on top of it, the US election, your Fed, company earnings. Get that out of the way. I think they probably do want to sort of, it's almost like they want to have a Santa Claus rally.
Yeah. And Marty, I say...
which we all would like.
Yeah.
Which we all would like, yeah. I mean, but I think that it's sort of building momentum for one, I think.
So what would create the Santa Claus rally would be a Clinton victory.
Yes.
And then what, the Fed holding?
Oil prices not falling after OPEC.
And the Fed holding or the Fed going?
I think the Fed going is still a better outcome.
Yeah.
Simply because
the markets like that though. Will there be a tantrum?
Yeah, no, I think Yellen's at risk of losing all credibility if he doesn't go. So I think the markets actually like a bit of certainty. 60% plus say it's going to happen. I think they'll see that as a sign that the US economy is okay, giving them a reason to continue to be long stocks.
Yeah.
So I'd say yes. Those things, and also go back to the US election. I don't think you want a clean sweep by Clinton. I think she. President, yes, but you've got to look at the Senate as well. I think if the Democrats take all houses, the market might say, hang on, we've got some problems.
That was the bell. We'll move on to the next topic.
Okay.
But just to keep to the agenda, so a lot of data out at the moment, but the big thing that everyone's watching on the local front is the inflation reading that's out today. Pete, talk us through what we need to know.
Yeah, well, I'm praying for more inflation, which I would never have said in 1970s or 1980s or 90s. And
you're just an old timer, Pete.
Because I'm praying.
You remember what inflation was like.
Exactly.
That's why age is good in financial markets. You can remember everything that went on,
exactly.
as long as you keep your memory.
That's right. And so, look, the thing is this. We know that inflation determines interest rates, and if inflation is too low, the Reserve Bank might be forced to cut. They don't want to cut. It'd be bad for housing. I think house prices will keep going up too fast. So I think what I'd love to see, 0.4 is the critical number most economists are talking about. If it's greater than 0.4, I think it's going to be a good result. And it also means that the economy is starting to get stronger and better.
Paul, do you echo those sentiments on the data, and are the RBA are they on hold?
I'm a bit like Peter. I think the RBA is on hold. I mean, I think it's ironic that you've got the US trying to find a reason to increase interest rates, and the governor here feels pressured simply because we might get a one-off inflation reading to lower rates. I mean, it doesn't make a lot of sense to me. Markets, we know that the world moves in sync, and if the biggest economy in the world is trying to raise interest rates, eventually they'll have to do it here. Yeah. So why would you go ahead and cut it here? It just does. It seems to me illogical, particularly when everyone knows it's not going to get passed on full and really won't do much to the economy. So, look, I hope, I'm a bit like Peter, I hope they don't, it's not a really such a low number that there's so much pressure they feel they have to respond. But I'm tipping no Melbourne Cup Day.
Yeah, me too.
Okay, so
you tell me I'm wrong next Wednesday.
Let's move on. Let's move on to the sectors. Paul, I'll start with you. The healthcare sector is one that's been a bit battered this week. Bit of rotation possibly on the cards.
Yeah, I think that's the biggest thing in our market at the moment is out of health. I think it's probably overdone, but it's not just triggered by. Obviously we've seen a little bit of bad news coming out of HealthScope. That's flowed on to Ramsay. We've also
Estia started it, didn't it?
Yeah, but I never really thought that was a legitimate healthcare company. That was aged care. I think there's different. But I think we're following a bit the US trend. Now, the US is a little different because they're worried about Clinton getting control and that having some big impact in terms of what that does for pharmaceuticals and the health insurance industry in the US. We've got a different set of factors here. Yeah. I think it's a little bit of follow the leader without knowing why.
Trump would be good for health stocks.
It would be good for health stocks without knowing why. But I think we're a little bit overdone. But it's just part of this sort of sector rotation that happens. Fund managers got to do something, and
materials obviously ran hard in September and have also done so in October.
Yeah.
So obviously,
is this a sign that the world economy is getting better. Like gold
Well,
prices up,
yeah.
iron ore prices up.
And the data out of China has largely been positive,
Better than expected.
better than expected.
Just go back to health stock. I don't think the underlying demographics have changed, and I think this is going to be a buying opportunity in this sort of so-called sector rotation.
Ramsey,
Okay.
the price to buy.
I think you got to buy the premium names, Ramsey, CSL, maybe Cochlear. You got to stick with the real quality companies.
Yeah, NAB report tomorrow, Pete. What are you expecting to come out of that?
I think the big issue is, will they announce a cut of dividends? And people have been talking about this for probably 6 months, maybe even a year, Paul. And you're our bank Johnny around here. What do you reckon?
Well, I mean, it's going to come down to how much they've been able to grow their revenue and whether there's enough to cover what their payout ratio is. I suspect they won't cut the dividend tomorrow, but whether it's going to stop the analysts from saying, okay, well, the next 6 months they're going to have to cut it, I'm not sure. So a lot riding on this result. Look, you could argue in hindsight the ANZ was brave to cut theirs 6 months ago, got it out of the way, and said, look, okay, we cut it. I think they went from 87 to 75 cents and said, we'll make sure it's at least 75 cents the second time around.
Its share price spiked too.
Share price spiked. NAB held at 99 cents. Looks like it'll probably try to hold tomorrow at 99 cents. But it'll really about whether they've been able to grow revenue and just what the payout ratio, and do the analysts say, okay, well, looks like they're just getting over the line and maybe the 99 cents can continue. I mean, at 99 cents, almost $2 dividend, I mean, NAB shares are yielding almost 7% without franking, right?
Pretty good return.
So pretty good return if they can hold at that level.
Yeah,
That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.